Credit Repair, Facts and Fallacies, brought to you by CreditSecretsBible.com. There's a lot of information available about credit repair, but so much of it is conflicting, it's easy to get confused. The credit bureaus themselves would like consumers to believe there's nothing they can do to improve their credit ratings. There are unscrupulous credit repair companies that guarantee miraculous instant jumps in credit scores. And then there are legitimate credit repair agencies that provide services that give consumers realistic and reasonable results. To clear up some of the confusion, here are 6 facts and fallacies about credit restoration. True or false? Only time can change the information on your credit report. That's false. The purpose of the Fair Credit Reporting Act is to give consumers the right to challenge the accuracy and fairness of the information on their credit reports. Congress recognized that credit bureaus have a vital role in assessing the credit worthiness of consumers. The act was designed to ensure that consumer reporting agencies exercise their responsibilities with fairness, impartiality, and a respect for the consumer's privacy. The result is a federal law that gives consumers the right to challenge the information in their credit reports. The FTC has warned consumers to avoid using credit repair services. Why? Well, because in the past, so many Americans have been deceived by them. Due to the number of people desperate for credit repair, inflated offers of overnight credit restoration target a large and eager audience. Most of these companies promise impossible results and fail to deliver after they have the customer's money. In an effort to protect the public from being preyed on by such companies, the FTC has issued the sweeping statement that, quote, everything a credit repair clinic can do for you legally, you can do for yourself at little or no cost. However, this isn't entirely true. Here's the next fact or fallacy. Accurate information cannot be removed from your credit report. That's also false. The Fair Credit Reporting Act provides in part that, quote, a consumer reporting agency is not required to remove accurate derogatory information from a consumer's file unless the information is outdated. Did you notice the wording, not required to remove? There's nothing that prohibits credit agencies from removing accurate information. In fact, the Fair Credit Reporting Act lays out exactly the situations in which credit bureaus are required to remove an accurate item from a consumer's report. Why does anyone say otherwise? Well, the banks want to know every derogatory event in a potential borrower's credit history, and the credit bureaus are in the business of selling negative information. Congress recognized that consumers are bombarded with offers of easy credit, and that good citizens should not be punished for every mistake they've ever made. Since the purpose of the law was to give consumers the right to challenge information in their credit reports, Congress left room for reporting agencies to remove even accurate information under certain circumstances. Here's fact or fallacy number 3. Credit reporting is subjective. This one is true. There's no one number or report that defines your credit history. There are 3 nationwide consumer reporting companies, Experian, Equifax, and TransUnion. Each of these companies has its own sources of credit information, as well as its own method for calculating a consumer's FICO score. FICO is short for the Fair Isaac Company. FICO scores range from 365 to 840. The higher the score, the better the credit a consumer has. Anyone with a score of 720 or lower might benefit from credit repair services. The way that FICO scores are calculated is shrouded in mystery. However, it's generally accepted that FICO scores are calculated on a scorecard on which several factors are given varying degrees of importance. These factors include delinquencies, the number of new accounts, length of credit history, the amount of unused credit available, and inquiries requesting the credit report. Since each of the 3 credit bureaus uses its own formula to arrive at a FICO score, they usually have different FICO scores for the same person. While some banks rely on only one FICO score, others look at all 3 and then average them together. And now, the 4th fact or fallacy. Credit repair can be instant and guaranteed. This one is false. There are no instant fixes when it comes to credit repair. Even if you were to pay off all your current debts, it would take at least a month for that action to be reflected on your credit reports. So, what is a reasonable period of time for a consumer to expect to see an improvement in his or her credit rating? Of course, it depends on the situation, and the consumer has to keep their credit in good standing going forward. Getting a new late payment reported will send your credit repair efforts back to square one. A consumer's goal is to convince the credit bureaus that the bad history is old information, and the new information accurately represents their current financial picture. Since credit bureaus tend to weigh most heavily the events of the last 12 or 18 months, depending on a consumer's specific history, it's reasonable to expect that it may take 3 to 12 months to significantly impact a consumer score. There's also an unpredictable aspect to credit repair. Of course, the skill of the person repairing the credit is one variable, but part of the credit restoration depends on what each of the individual creditors and credit bureaus do. For this reason, the same type of request regarding the same kind of derogatory credit information can have very different results from one creditor to the next. True or false? Lenders are the only ones who look at your credit report. That's false. Running a credit check has become a common practice among a lot of businesses that deal with the public, and not just lenders. More and more insurance companies are pulling their applicants' credit reports before making a decision to issue or not issue coverage. The insurance industry justifies the practice by pointing to its finding that the likelihood a customer will file a fraudulent claim rises if that customer has a bad credit history. Of course, even if a consumer convinces an insurance company to issue a policy in spite of his or her bad credit rating, that customer is very likely to pay a higher premium than someone with a good credit. Employers frequently check on their prospective employees' histories. It's very disturbing to think that a couple of derogatory reports on your credit report could keep you from landing a job, but it's true. It's not much comfort that any employer who rejects a job candidate because of his or her credit history has to notify that candidate in writing and provide him or her with a copy of their credit report. There's now a law that requires insurance companies and employers to get written consent of the consumer before running their credit history. But this isn't much protection. A potential employer can claim that a job candidate hasn't completed their application until they sign the consent to have their credit report checked. A bad credit report can negatively affect many aspects of your financial life. With something this important, it makes sense to get professional help with your credit repair. The result of any credit restoration effort depends in large part on how well a consumer complies with the repair program, as well as with the skill of the credit repair professional hired. And now, the final fact or fallacy. Anything a legitimate credit restoration company can do for you legally, you can do for yourself at little or no cost. This is false. Since credit restoration companies work with numerous clients, the reputable ones have much more experience in dealing with creditors, the credit bureaus, and collection agencies. In the end, it comes down to the cost-to-benefit ratio. How much can I do myself based on my current skills and experience, and would I benefit by hiring someone to handle the more technical aspects of my credit report? The answer is almost always a resounding yes. A skilled credit restoration expert lives, breathes, and eats their work. They always have the light bulbs going off in their head as to additional angles that can be used to get you the results you need, and as quickly as possible. For example, some collection agencies can be very uncooperative. You just can't shake them. They might ignore your dispute letter, and the credit bureaus might verify the account is accurate. What next? A skilled credit restoration expert will be able to bring you the persistence you need in getting negative items removed, as well as helping you add positive primary unsecured accounts to your credit report to immediately boost your credit score. This is why all consumers should consider hiring a professional. This video has been brought to you by CreditSecretsBible.com, the fastest way to raise your credit score, guaranteed. For more information, please visit CreditSecretsBible.com.